This is Golden Rule Radio, and we're going to start this week's show with gold doing exactly what we've been talking about for the last few months, which is pulling back. We've been waiting for this for 3 months since gold broke above 1,300, and we've been telling you we're going to see some kind of weakness in here. I'm going to say this for the record. This is your opportunity.
Yeah, Robert, but the question is it yet? You know, with this break below 1280, we've been talking about these fib numbers for a while, and we finally got below them. In fact, we even got below that January low, which sort of built this base. So at 1278 or so that we're sitting at today on Wednesday, and some beautiful 618 fibs lining up, coming up hopefully in our future, maybe down in the mid-1200s. What kind of opportunity are we actually looking at here over the next few weeks? I mean, it really feels like we're tightening that screw or pulling that arrow back, ready to release up and possibly retest those old highs again as we get into the fall. So I know you've said over and over for the last month that we have this repeating pattern for years where we have our run up in the spring, we cool off come the end of the spring, beginning of the summer, we build a new solid base, and then we look to set new interim highs in the precious metals market. So I don't know how many more times you can say that we have this opportunity coming up. I mean, we set it at 1050, we set it at 1150, we set it at 1200. Now we're looking at hopefully pulling back to the 1250 or maybe even sub 1250, 1245-ish range.
Well, to counter that slightly, Miles, yes, it is maybe not the low right now, but I think what Robert's talking about too is why is this an entry point? Because we may not be awake when we see your entry points. If it gets to 1245, if we come down to that next support level at 1260, we very much welcome it. It might happen in the Asian market. It might happen in the London market. We might be asleep. So as we get these declines, I encourage clients, yes, position in, get in waves, cost average in, and let's get it done. Are we starting summer a little earlier than usual? Well, we're probably a month sooner than when we tend to see these lows. And we could absolutely see a sideways pattern here for a while, right?
Sure.
Forming a new channel, but it is that potential energy. It's taking that spring, pushing your thumb down, and the lower it goes onto your support levels, as you point out in the chart, the more kinetic energy results afterwards. I have no doubt that we're going to end up setting some higher highs above that 1347 into that 1360 channel.
Well, sure. And we've got generally around June, July that you see the ultimate low in metals. It took from January to April to go from 1340 to finally getting below 1280. So to go from 1280 down to 1240 over the next 5-6 weeks, that's a completely reasonable time frame. I mean, we're likely not going to wake up tomorrow and see our low put in. So I actually think the timing might line up perfectly. We may not be early. We may just finally be getting a little bit of confirmation of what we've been talking about with the precious metals price, specifically gold, coming down and testing either this interim low that we set from the lows last year, or how amazing would it be if we even push down to that multi-year rising trend line down even below 1245, down around 1205, 1210.
Robert's smiling like he's looking forward to the opportunity.
This opportunity? Yeah, because you guys are talking about these numbers, and I mean, we're only 10, 20, 30 bucks away from these numbers. We're
less
right
than 2%.
Here. I have a little bit of a stronger opinion about buying, and don't miss a chance to buy under 1300. Every time we've been watching these little stair steps since the bottom in December 2015, we've stair stepped from the high 1,000 range into the 1100s. We've gone to the 1200s. We've gone to the 1300s. You're eventually not going to be able to buy gold below 1300. This is your chance, whether it's 1272, about where we are today, or 1245 or 1255.
Yeah.
It's below 1200. I think this is your chance. If we see more weakness, great. But we could easily not see more weakness. So this is your chance to buy it below 1300. Don't miss it.
Well, I like your point too, because we're getting, in my opinion, a few non-confirmations at this point, which goes to Miles' chart and Miles' opinion that this may take a little bit of time. But silver's not following suit, right? It hasn't dropped proportionately with gold. The equities markets, if you count thus far into the month of April, and you count it all as a first quarter, best quarter since the 90s, right, in the equities market. So gold, of course, is going to have that downside pressure because of that. US dollar, it's not breaking out into a new channel as we break below support. So it's not confirming to me necessarily that we're going to see some significant decline from here. So all points that support what you're trying to say, Robert.
How can you get excited about the best jump in the Dow since the 1990s when you're talking about coming off the heels of a 20% decline? That's like saying, hey, that's the highest I ever jumped, but you didn't jump, you bounced because your parachute didn't open when you hit the ground.
I'm not excited about the equities markets. I'm just trying to describe what gold is up against. That's it. So let the wind be in the sails of the equities markets right now. It'll come back into the gold sales, and I'm not worried about it right now. Do you want to show us the silver chart and explain a little bit what we're talking about, this non-confirmation and how that's impacted the ratio?
Sure. It seems like as gold's been leading the charge up, it also, at least in the short term here, is leading the charge down. I mean, silver is still sitting above its fibs. It is stair-stepping down slightly, although it's stair-stepping down and starting to show some RSI divergence on the bottom end. So we could see a couple other steps here and retest some lows around about the same place, or at least same time frame gold does. And then I wouldn't be surprised to see at least an RSI interim reversal, not where silver's turning up long term, but where we bounce before it maybe continues down a little bit. So yeah, for me, silver continues along with gold, doing the same action as gold, just a little bit behind and a little bit more tame, until gold possibly this fall breaks out to some of those new high level marks. And you're really just waiting for the general public to say, holy smokes, gold's what? I'm going to buy some silver.
So there's some similarities with silver and platinum charting wise, because it's kind of a prime example of the previous resistance level that we broke through to the north on silver. That resistance level has become a little bit of support. Around 1480, 1490, that was the previous resistance. It broke above it. We've been trading above that for a while, and now as we're coming back down, that's become support instead of previous resistance. Similar thing with the platinum chart. The previous high being about 875. We broke above that. We've been trading above that for about 2 weeks now. And now as it's pulling back below 900 with the platinum price, it's kind of bouncing right off of this 875 range. Not saying that that's going to hold on either one, silver or platinum, but it's interesting to note.
It is interesting to note, and platinum at least is up today when gold and silver are not. So
I think we're looking at platinum moving up to the 960 level. You can extrapolate some fibs out that put some nice lines on the chart that makes sense to me. So as gold and silver are continuing down, platinum, another little third drive up. You build a 3 drives pattern, then you finally have a correction back down to follow in line with what gold and silver have already started doing.
And we've been talking about platinum, price-wise, but talking about it in relation to gold, it has moved that ratio at least 10 points off the bottom. This is the type of opportunity where you can multiply or compound your ounces by buying the cheaper metal, looking at going to the other metal down the road.
Finally, taking a look at palladium. Palladium has sort of dead cat bounced itself off that 382 fib. So I'd expect to see a little bit more up movement. Again, extrapolating out some fibs, that brings us up to the low of the previous high you can see on the chart here. So somewhere up here, I think we're going to see palladium find its top, at least short term, and then possibly continue back down throughout the rest of the summer. So before we close out this week's show, we did want to bring to light some things that we've seen on the COT report, the Commitment to Traders report, because as we're seeing some of these metals come down in price, we are seeing a slightly different story when we look at the Traders report on a week-to-week basis. So Tori, what you got?
So I'm just going to bring up 3 of them. Let's look at platinum, silver, and gold quickly. So platinum back in November, okay, we had just started to turn and bottom. We still had a huge net long position in platinum. So it was kind of telling us that we should start to see a reversal. So we were about 9,000 contracts long. Now, each contract in platinum in the Commitments of Traders report represents 50 troy ounces. Okay, so think about 9,000 net long position in platinum back then. Now you're talking about a 22,000 net long contract position in the futures market in platinum. So that's bullish. And again, we're seeing that in the spot price. Now let's look at silver. Silver back then, you had a 41,000 net short position. So a lot of money banking that silver was going to go down, and it did. I mean, we were sitting there watching this continued bottom. Now that is completely reversed to a neutral position. Silver now is essentially flat. You're about 3,000 net short in the futures contracts, and that represents 5,000 troy ounce. Okay, so each contract is 5,000 troy ounces, and you're essentially 3,000 short on that. So that's sort of a neutral position, just like silver's acting. And then we look at the gold. We now are at a 40,000 net long position. That represents about $5 billion because each contract is 100 troy ounces. All right, well, where were we back in November? There you are looking at a 79,000 net short contract position. So there was a lot of bearishness in the late summer, in the fall, that then we then started to see reverse, and now we see these numbers that are far more bullish than we were. So let that lend a little credence and support into the precious metals markets, physically, spot price wise, and hopefully even the stock price.
So that's going to do it this week for Golden Rule Radio. We appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell, head on over to our website, McIlvaney.com, Twitter @ICA Gold, Facebook, McIlvaney Financial, or give us a call anytime at 1-800-525-9556. Thanks for listening.
Have a great week.